Ladies and gentlemen, welcome back to TMP Finance, where we make long and short-term investing simple. Today's video is going to be a little bit different. What we're going to go over, we will go over the NASDAQ real quick, but we're going to go over 5 stocks that you need to be keeping an eye out for. They're going to have some huge upside potential within the next coming months. So without further ado, let's get started over here. And actually, let me just mention here before we get into these stocks that what I'm basing these trades off of is purely technical analysis. Now, I am a technical analysis trader, and that is what I've been trading all of my professional trading life. And I have not had an issue, or else I wouldn't be trading that method anymore, right? So I don't care about financials. I don't care about if the CEO has relations with the president, or if sales are up 500 million billion% within the past quarter. It doesn't mean anything. And you can tell by this just by looking at Tesla's charts. You can see that their earnings, they missed by 20-30%, and then the stock is up 10% the very next day. Things like that. The market is not logical, because think about it. Just take a second and think about it. If it were easy to just read a financial report and then trade based off that, if the earnings are green, then that means that you're going to go long, or if they're bad, you're going to short it, then everybody would be making money. But again, the market is very emotional, and it's very non-logical when it comes to just the news. You can't be looking at news. You can't be looking at word of mouth or what's going to happen in a company. You don't even need to know about a company. I'm currently up 589.87% year to date with my stock trades, and I don't even know truly what most of these products for these companies are. But I take a look at the chart, and I do my technical analysis, and then I place my trades, sit on my hands, and wait for the money to come in, and that's all you can really do. And that is by far the best method. And I can swear to you, it sounds crazy, but I can assure you, it works very, very well. And all of my clients and all of my students are going to tell you the exact same thing. So without further ado, let's get started into this analysis here. For the NASDAQ 100, we can see that we're down 0.18% today. We did touch the resistance line, or coming up very close to touch that resistance line. That being said, I do think that we're going to come back, touch the support line, and then from there we'll see most likely, again, touch resistance, move up back to support up above. But that being said, we're going to wait. If we do break below this green line, I'm holding cash. If we break below this yellow line here at 22,900, then I'm shorting the market all the way back down to previous all-time highs. This area over here is a 100% chance, and it's probably one of the only guarantees in trading that you're going to have retests when it comes to indexes for previous all-time highs, especially when you had a massive dip right after the previous all-time high. So that being said, this has a 100% fill rate. It could happen within the next month. It could happen within 2 years. Who's to say? But when it does happen, you're looking to short the market from that area, move all the way down here, retest. That's pretty much it. But let's take a look at our first stock here, and this is for the trade desk. Now again, what does it do? I don't know, but that's not the point. The point is that the analysis looks really, really good. Over here, from previous all-time highs, all the way at $140 a share, we can see that the stock has gone down a total of about 70%, and we're currently sitting down at about 63% from its all-time high. And that's it's kind of like the same thing as like UNH, the same amount that it's fallen here. But what I can see here, the stock has a lot of very good growth here. You can see exponential growth. That's what I love to see when it comes to growth stocks. That's continuously growing. You do have a bit of a range. You have this support down below here at about $40 a share. Great psychological level. Then you have a resistance above at about $90 a share. Great psychological level. That being said, when you see that stocks fall very, very quickly in a very short amount of time, and by a lot, that volatility, it cannot be sustained, right? If that's the case, then in a couple months, you have companies that are worth hundreds of billions of dollars completely wiped. But it doesn't go like that, again. So if you have a very strong move to the downside, you're probably going to have a very strong move to the upside. That being said, very close to the support level there, what you could be doing is looking for a double top. If we do receive a double top, very simple, I'm keeping my support or my stop loss right at the bottom of the support here at about $42 a share, and I'm taking profit right above at about $90 a share. Not only is it a great psychological level, as I mentioned before, this is also a great level because this is also a gap fill as well. So if you want to keep it right below $90 for that gap fill there at about $87 a share, you will not only get a great risk to reward trade of 4.28, but you will also miss the risk of not getting a pixel perfect trade where you come exactly for $90 a share, and then institutions are selling at 89, and then you never cash out for your trade and it goes a whole lot lower. That being said, $87.63 is a very good trade there. Great risk to reward ratio of 4.28. Let's take a look at the next stock. Now, this is a stock I've traded in the past, Adobe. Adobe's a fantastic stock for trading. A lot of great volume, a lot of great volatility, We can see here that from its all-time high, Adobe is currently down. Let's see here. At its lowest, it was down about 60%, 60.6. Currently, it's down from its all-time high, 50.15%. That being said, I think Adobe is ready to move for a next leg higher, or make a new higher high at least, just because we did touch the support level a few times here, 3 times. I think this shape right here as a double top is a very strong shape, and I do get a lot of very nice trades coming from that. We can see that we have touch of support again for the second time. You have this bullish engulfing candle, and then you have this momentum candle showing that bulls are on the right side here and that we're ready to go a whole lot higher. That being said, my stop loss is right below said level at $332 a share, and my take profit, what I typically do here, I take a look for where we have a lot of volume in the market and a lot of tops. I can see here that we have 1, 2, 3, about 4 tops here, 5, you have this rejection here. This is also a previous support level as well. That being said, I think that there's a lot of volume here. This is a level that institutions are looking to take profit from. That being said, my support or my take profit is going to be all the way up at this key level here, about $519 a share. Great risk to reward ratio of 8.9 risk to reward. Again, if you're risking what you can afford to lose, you can't go wrong. Again, this is 9 times your money just by placing one trade, waiting, sitting in your hands, and just waiting for it to cash out. That's pretty much it. Whatever happens in between, whether it goes up, down, makes an M shape, or does a loop-de-loop, it doesn't even matter. Whatever, if it cashes out, it cashes out. If it doesn't, it doesn't. That's pretty much it there. Let's take a look at MDV here. This is MongoDB. What do they do? You already know my answer. I have no clue what they do, but that's besides the point. What I'm seeing here is a very strong resistance level over here, falling down here. I can see as well from its all-time high that we are down a maximum of about 76% or 77%, which is absolutely massive. And right now, from all-time highs, we're currently down 65.68%. Do I think that we're going to be coming up to all-time highs? That's a big gamble. And again, when it comes to stock trading, I like to choose very cherry-picked stocks and very safe ones where I don't really have to kind of go in blind. I kind of have some kind of expectation. That being said, again, take profit. I'm looking for a very significant key level. I can see we have a lot of tops here. We have 1, 2, 3 very significant tops over by the 428 key level over here. And that being said, when we do get a break of this resistance here, my trade is looking very, very simple. It's a very simple breakout trade. Place my trade when we break out above the line, taking my stop loss down to the swing low. Let's say that we start rejecting from this level over here, which looks to be like a little bit of a support level here. And I will just draw a line here so you can see. This is a not very significant support, but you do have, you know, your resistance here, and then you have support over here. If we do get a rejection from this level here, we break above, stop loss right at about $203 a share. Take profit up where we have a lot of volume here, $425 a share, 9.4 risk to reward ratio. In the past year, we've taken trades of 10, 20 risk to reward ratio. So even though it's high, it's not impossible, because those are some of my best trades. Like with AMD, I bought at $93 a share. I had my stop loss right at $90 a share, which is not very far away. And now I take profit all the way up at $180 a share, and it cashed out beautifully, as you can take a look at the chart right there. But yeah, MongoDB, great stock to look out for. Great technical analysis there. Let's take a look at Atlassian Corporation. Again, don't know what they do, but the chart's looking very strong here. What am I looking for? I'm looking for key levels. I'm looking for support and resistance. We are very close to a support level over here, a rising support level. What you could be doing is placing half of your trade now and saving another half for if we do come back and touch this the support level here, so you're kind of evening out. Very simple. Stop loss right below the swing low. Stop loss right below the support level as well. And then take profit where we can see that we have a very nice key level over here with a lot of rejections. And let's just zoom into this level over here. I can see it about $240 a share, kind of a psychological level. You have a lot of tops here, 1, 2, 3. You have support here, 1, 2, and then you have a fourth resistance, 5th resistance, 6th resistance. You have a 3rd support level, a 7th resistance. This is a very key level here. That being said, I take profits right to that level. 4.43 risk to reward ratio. If you do decide on evening out as well, waiting for that support touch, you're looking at about a 6 to 7 risk to reward ratio as well. Let's take a look at the last stock here. This is Fortinet Incorporated. And again, I see this very volatile move to the downside here. From its all-time high, you're looking at a drop of 38 or 39%. And then from where we currently are from the top, we're looking that we're down about 33%. Now this one drop here, it looks like they had earnings. Earnings did well, however, there's probably something that didn't hit. That being said, they did drop a lot in the post-market or pre-market areas here, and you're looking at a drop of about 23%. So again, that is something that's not very sustainable. Now what I can see here, we're having that V-shaped recovery. You have this retest of the support level over here at $70 a share. Great psychological level as well, showing that there's a lot of support and a lot of strength from that area there. But for this trade, I'm placing my trade now, or I can place it if I want to wait for it to go a little bit lower and get something like a 3 risk-reward ratio. I think that is still very possible. Again, not a long way for it to go down. Stop loss right at the support level, right below it. Take profit right at this gap fill here. And this gap fill is also right below the $100 psychological level. And you can see here, this is an incredibly strong support and resistance. You see a lot of tops here and a lot of bounces off this level as well on the upside. And I think this is a great trade here. Now, you have 1, 2, 3, 4, 5 stocks you should be keeping an eye out for. That being said, how do you go about trading this? Let's say that you have, that you're willing to lose $100 per each stock. That being said, that is a great risk reward there. That's a great risk management tool to think about how much you're willing to lose. $100 a stock, and again, some of them, they might lose, but majority of them most likely won't. That's just the nature of trading. You're going to have wins, you're going to have losses, but at the end of the day, as long as you have more winners than losers, and as long as you have a high risk to reward ratio, you're risking less than you're possibly winning, you can't possibly go wrong. That being said, let's say that you have 5 stocks, you're risking $100, and let's get the average risk to reward ratio here, and let me just calculate it for you here. You're looking at an average risk to reward ratio of about 5.89, call it 6. If you're willing to risk $100 to make $600, that is a fantastic way for you to be ahead in the long run. So placing those trades with the amount that you're willing to risk, letting them run, not caring about what happens in between, waiting for that cash out or waiting for that stop loss, whatever happens first happens, and that's pretty much it. But I think these are great stocks that I personally will be placing a trade for very, very soon, and I think that you should too. But that's going to be a wrap for today. If you're interested in more daily technical analysis, think about joining as a subscriber here to this channel. If you're looking for more guidance on how I'm looking at these stocks, if you want to know more stocks that I'm telling my Discord about, come join that Discord. You get all the trades that I take in real time. You get the take profit, the stop loss, the percent risk allocation, free one-on-one sessions, and a whole lot more. So if you're interested, come take a look at the link in the description. But that's going to be it for today. So thank you very much for joining in, and I will see you later.